Good morning, everybody, and thank you for joining us today. We're excited to launch the first event of our retirement plan series with Bricker Graydon and Haran Wealth. The presentation will be recorded, so if you would like to watch it at a later date, we will be sending out the information on that. We will also be sending out the contact information for our moderators and panelists today. So if you have any questions, please send them in the live chat. We will do the best we can we get to them. But if not, you're welcome to reach out to them later. And with that, I will go ahead and turn it over to Giovanna and Carrie.
Thanks, Katie. We just wanted to go ahead and do brief introductions before we get started with questions. My name is Giovanna Krajewski. I am the audit manager here at Dean Dorton. I have been with the firm for almost 13 years, and I believe the bulk, if not my entire experience, has been working with employee benefit plan audits. Carrie?
I am Carrie Walls, and I am a senior manager at Dean Dorton, and I have been here for about 25 years. And like Giovanna, I've been with employee benefit plan auditing the bulk of my career as well. John, do you want to go next?
Yeah. I'm John Kirk. I'm a partner at Bricker Graydon in the Employee Benefits and Executive Comp Group. I've been all in 20-something years of practice. I've only ever done benefits. And I started at the United States Department of Labor. Paul and I served at the same places, just not the same times. But I conducted, benefit audits and investigations for the DOL, and now I spend my time making sure we get through those in a easy, and I won't say timely, but relatively easy manner.
All right, and Paul.
And good morning, everyone. I am Paul Carl, often called the man with no last name. As John said, I started my career with the U.S. Department of Labor, and currently, and have for the past 10 plus years, worked at Haran Wealth in the retirement plan group, one of a dedicated, several team member. And we work with employers and employees, helping employers protect employers and help employees with paths to retirement and financial success.
Great. So with that, let's get started with some questions. Paul, in the retirement world, we hear so much about the Department of Labor or the DOL. What gives the DOL the authority to oversee retirement plans?
Well, it's kind of interesting. In 1974, Congress passed what's called the Employee Retirement Income Security Act, what we know today as ERISA, as amended. And ERISA contained 4 titles, but it was Title I in particular that created the Department of Labor, at the time, Pension and Welfare Benefits Administration, which we now know as EBSA. But it all stems from a law in 1974 called ERISA.
Paul, how concerned should we be about the DOL's impact?
Yeah. So, we should be very concerned. John mentioned that we both worked at the DOL, although our times did not overlap. I spent the first 8 of my 38-year career at the Department of Labor. So, I'm talking 1994 roughly. Best of my recollection, there was maybe about $90 million reported in Congress as recovery funds. So prohibited transactions and other items that were reversed at that time. So just to give you an idea of their impact today, and this runs on a fiscal year. The government runs on a 10/1 through 9/30 fiscal year. But the 2023 enforcement results are just, to me, outstanding. They reported $1.44 billion in monetary results. In addition to that, they closed 731 civil investigations And the Department of Labor, EBSA, has criminal jurisdiction as well, and they closed 196 criminal investigations. It's just absolutely phenomenal, how the enforcement and the results have exploded through the years.
And that billion amount, that really only comes from about, well, I imagine we'll look at the same report, but that was only about 69-70% of the actual investigations. There's about 30% of the time they will open something and not actually, it won't proceed for a variety of reasons. Because for the most part, if they open one, they're going to find something. So it's more like we opened it and then we just didn't do anything with it in about 30% of the cases. So not even 100% of them are hits, but they are aggressive, and they're getting more aggressive on everything.
And it's funny, John, you mentioned that, and I feel like there's some noise in those numbers as well. And just to give you an idea, we had a client that was processing a distribution based on a distribution request. The participant did not understand that this was not like going to an ATM and just punching in, I want $100, right? There's a process that takes place, and a sale of investments, and then distribution paperwork and so forth. So the fact that there wasn't, we'll call it 24-hour turnaround, and they couldn't walk in and just, get their funds, they called the Department of Labor. And
Yeah.
and so, long story short, the Department of Labor called our client, they called us, we talked to the participant, we talked to the Department of Labor, the client talked to the Department of Labor, and everything got distributed in the normal course of business in an appropriate amount of time. But that distribution, I can't remember exactly how much it was. Let's just say it was $10,000. That the Department of Labor wanted to know the amount, because they do report that as part of what they help gather. And so I guess my point is there's a little bit of noise in those numbers, but there's some legit stuff too, right?
Yeah, there's the Paul's point. There is, so there's the, well, Paul and I we were investigators, auditors, if you will. But then there's also what people call pension benefit specialists. And essentially they're the ones when you call the DOL, they actually answer. And part of their job is sort of filtering out complaints. Is this someone who just sort of doesn't know what's going on and we need to explain it to them a little bit? Or are we getting multiple sort of things that sound serious from, they all keep saying the same employer or the same kind of thing. So it filters up. So that they try and filter, but sometimes Paul's right. Sometimes it's just a phone call to the employer. The employer says, no, this is what happened. They ask for a little verification and everything's, it's all done. But no one likes it when the phone rings and say, hi, this is so-and-so from the United States Department of Labor.
Right. So, John, the DOL run both civil and criminal investigations concurrently?
They can. So,
Yeah.
So what I'll say is there's different ways that the DOL decides they're going to do investigation. One, participant complaints. Two, something under 5,500 triggered the complaint. You had $1 million in assets, and the next 5,500 you have 16 million, or you had $1 million and now you have 40,000, or wild swings in participant counts. Or I had a client, they had an audit by their auditors, and they reported that we had some late contributions that had not yet been corrected. And so that, that generated a letter from the DOL saying, hey, you need to fix this. So it's participant complaints, 5,500. And lastly, they're doing some sort of initiative, whatever that might be. So when I was there, I spent a lot of time tracking fake MIWAs, multi-employer welfare arrangements across the Midwest. But we were also at the time looking into how Blue Cross had handled some investments, and then we look and how Prudential had been handling some investments. And so they couldn't subpoena Prudential, for example, so they would start auditing all their clients. to see if they could get proof to move up the chain. And so sometimes we'll say, all right, we're going to audit everyone that uses this service provider with this EIN code in this geographic area, or this this NAIC code of a certain size in this area. So sometimes it really is just purely random that you got flagged. But once they begin the investigation, they'll start asking for documents and those sorts of things. If they discover criminal or something that potentially could be criminal, they have a choice. So usually what happens there is the investigator will tell their supervisor, who will bring in the regional director, and they'll decide, are we gonna finish what we're doing in the civil side, determine if it's criminal, and then start the criminal case, or are we gonna run them concurrent? And so if they're gonna run them concurrently, they then have to make a decision. Either the civil investigator will continue on their civil pass and will get a new person in that runs a criminal, or they might move the civil person over to criminal and bring a new person in for the civil case. But they run totally independent within the DOL. So if they're running concurrently, they put different people in different groups with different supervisors looking at those things. Never the two shall talk. If there's if we get someone says, hey, I want to talk to a manager, I want an appeal, it's always different people. So they do everything in their power to not taint the two investigations to see where they get. And at the end of the day, if they decide it is criminal, they then will refer that out to the regional attorneys at the DOL, who then works with the United States Attorney to determine what happens there. I did a few criminal cases. Paul, you were there longer, so you probably had some as well. The criminal cases are, that's fraud, that's embezzlement, that's
Right.
You're doing something. It's not you didn't just mess up something. You're actively.
Right.
The one I remember is a guy he kept showing up with new sports cars, and the employees noticed that their investments weren't doing well. And when they went to look at it, here the plan was invested in collectible cars. But essentially, he was just buying cars for himself.
That's funny, John, you mentioned that because my first criminal investigation involved cars also. It was a defined benefit pension plan that the owner of the company started siphoning off funds from the trust to keep the company alive, because the company was funneling funds into race cars so that he could compete at the Indianapolis 500 Speedway, ironically, timing wise, with our conversation here today. So yeah, cars were not always a theme from a criminal aspect, but apparently.
So I'll say, if you're out there listening and you notice that your pension plan is investing in cars, and you don't want them to be, maybe call the DOL.
Next question, it's still related to the investigations. John, can you just a little bit more hit on what's the biggest similarity and the biggest difference between civil investigations and criminal investigations?
Yeah, I mean, civil, for the most part, civil tends to be pretty broad net. They're going to ask for a lot of documents, a lot of time. They seem to be taking longer and longer to resolve. The last one I did took almost 2 years. I mean, it was just sort of hanging out there for a while. But it's usually we're looking at everything. They may interview you a lot. Sometimes it's what they call a desk audit, where you're just sending documents to them. When it flips over to criminal, it tends to get much more sort of one, fast tracked, potentially, two, a little more laser focused. They're going to say, we want to look at this, we want to look at this. Usually more interviews, more sort of, we need to talk to this person, we want to see these transactions. When it is criminal, they have the DOL involved, they have to identify that, tell you that it's criminal. You have the right to counsel. You have all those sort of rights you would think about if you're under investigation by any federal agency. But they're going to tell you it's criminal. When they start sending subpoenas, they have the ability to subpoena records in civil or criminal side. the subpoena identifies it as a criminal subpoena. So you're advised as soon as the switch is flipped to start a criminal investigation that it is criminal, and that's what they're looking for. They will give you the scope in general. They'll say this is what we're looking at, but it tends to be all of a sudden the light that you had shining on you gets a lot brighter, but it's more pinpointed to what they're looking at. Now sometimes it is, sometimes it's criminal and they're looking at everything, but a lot of times you very clearly can tell, no, they're looking at this particular issue. And because that's as soon as you see the subpoena, you're like, oh, this is what they're looking at, because you know what they're asking for, who they want to talk to, and the dates and those sorts of things. But that's really the similarities. It really looks the same. They're asking for documents, they're doing interviews, they're taking documents, reviewing them. They vanish for 4 to 5 weeks, and they call you back and say, well, we want these more documents, or we want this follow-up questions. But it's always, those are very much labeled criminal at all times. And so whether you get a civil or a criminal subpoena, start calling your lawyers, start calling your investment advisors, start calling your plan auditors. Just get everything in a row so you can respond to those, because a lot of the requests are voluminous. I mean, they're we want all the plan, all the data for all the payroll runs for the last 3 years, for example, so we can see when those contributed. We want all the investment records for the last 3, 4, 5, 6 years to show what all the trades you've made. I mean, it's a lot of work to respond to some of these.
Should
So,
you respond
John,
like as soon? Oh, go ahead.
Yeah, I'm sorry. John, I'm just curious, like from what I can remember, during a civil investigation, we pretty much just worked those by ourselves. And then our results, we would report to the IRS. But the criminal investigations seem to me like often, maybe the Postal Service and or the FBI, there was at least another agency involved. Was that what you encountered?
I think that's right. A lot of times I think they'd start with us, so within any DOL office, and the Cincinnati regional office sits in Fort Wright, Kentucky. They are blessed in that they are not in a federal building. They get free parking and easier commute, but they're right there in Fort Wright. Within the office, there's a criminal coordinator, so someone who's just in charge of the criminal cases. And so a lot of times, well, my experience, it would, we'd sort of started, and if say it stayed with that person, the criminal coordinator would work with you. But yeah, usually after a while, it would be some other agency, because we start getting concerned about various things. The FBI for the most part, Postal Service some. I was involved. I had the SEC come in because we had some securities issues. But yeah, a lot of times, maybe once we sort of got a really good idea of here's what we think the criminal thing is, or here's what we were really sort of looking for, you'd start seeing those second agencies pop up. And if you're a plan sponsor and all of a sudden your friendly DOL agent shows up with a postal inspector or a SEC investigator or the FBI, no, they think they're really onto something at that point, and frankly, they probably are, because they don't drag in the other agencies until they have a pretty good grasp of what's coming.
I was just going to ask, yeah. So when somebody receives a letter from the DOL that they're getting investigated, should they respond to the DOL as soon as they get it? Does that help them in any way? Just say, we got your letter, we're working on it, or does that really not matter?
It doesn't. And Paul, you've done this, dealt with these as much as I have. I don't think you don't really have to respond. I mean, they don't really use email even to this day. When I was there, we had email, we couldn't share it. They're better about email. There's now things we can. I just did a correction for a client. We actually were able to upload the correction documents to a secure site for the DOL to use, those sorts of things. But they're not great about DOL. Everything's generally paper.
Mm-hmm.
When you get that letter, it's going to have a response date. It says you need to respond by X. There's no real need to call them and say, hey, we got your letter. they're pretty confident about it. If you need more time, for whatever reason, they ask, and it's tough, say, hey, you're working with Principal or Fidelity, and they want a bunch of records. Well, then it's got to work its way through the Prudential or the Principal or the Fidelity or the Empower system to get those documents that potentially get them to you, because you don't have them. You may have that current or somewhat current. You can get through the self-service portal. So if you need more time, that's when you respond. If as long as you have a halfway decent reason, they'll usually grant you for sure almost always a 2-week extension. If you need longer than that, you need a better reason, such as they're in a box in a warehouse somewhere and we have to send somebody to find them. But so if you need to respond for that, don't wait for the deadline to respond and say, hey, we need more time. As soon as you know you need more time, send them a letter. You could fax it to them. We still have fax machines, I think, solely for the government. So you can fax them, shoot them a letter. There should be a phone number on there if you have an agent assigned that you can just call and tell them. And usually they'll, 2 weeks almost always, longer if you have a pretty decent reason. And they'll usually say, there may not, sometimes they'll send a letter saying, yes, we agree to 2 weeks. Other times they'll just be verbally say, yeah, you can respond in a couple of weeks. So there's no need to respond immediately, but for sure, do not miss the deadline without communicating with them. Either send what they're asking for with a note saying, listen, we're still waiting on this thing. We need a little more time. Or if you know you absolutely need more time, call them and just say, hey, we need a couple more weeks. Our vendor says it's going to be 10 days, 15 days, whatever it is, just so they know. Because as soon as you miss the deadline, the computers just automatically trigger a next letter that says we've assessed a penalty. And now you get to start negotiating, getting them documents and trying to get out the penalties they've assessed for not responding.
Right. And I agree with everything you said, John. I'll just add that in the event that they don't send the follow-up letter, which does seem to be kind of 50% of the time, you get the verbal with no follow-up letter, and 50% of the time, there is an acknowledgement, a written acknowledgement. Document the conversation, date you called, time you called, who you spoke with, even the phone number that you called, and what was discussed. Doesn't need to be a lot of detail, but just some type of documentation saying that so and so agreed to a 2-week extension and so
they'll always give you their name. If you call them and say, I'm so and so, so you can write down, talk to Dave Smith, on this date at this time, they agreed to a 2-week extension. But, like we said, they don't really fight it, but asking for a second extension, get all the time you think you'll need, because asking for a second gets a little harder, just because now there's, are you stalling, are you pushing back, or is it, truthfully, in all honesty, if you can blame the vendor, just because the vendor's taking too long, they're pretty agreeable to that. If you don't really have we just need more time, that's generic reasons don't always get the second extension.
Sure.
No.
So, Paul, what are the top compliance priorities for the DOL?
Well, let's see. How much time do we have? I'm kidding. In no particular order. They do have a number of priorities, and I guess in a way they're not in a way. They are all important. The ones that come to mind really first for me, cybersecurity. They are very hot on cybersecurity. They're always hot on fees. They want the plan fiduciaries to know what fees are being paid to who, and they want to know, what the amounts are as well, transparent and non-transparent. If you're a plan fiduciary, you should have a good idea of what's being paid and how and why and what services. Doesn't necessarily mean that you need to go out and find the lowest provider, just that the fees are, you're aware of them, you're evaluating them periodically, and you're getting services commensurate with it. John mentioned it before, employee deferral remittance. You know, this is a hot topic. This shows up a lot on 5500s. Did all funds get remitted timely? Yes or no? And if it's no, you know, it's more than likely going to trigger some type of inquiry. Abandoned plans are huge. Obviously, Secure 2.0 is addressing that, and the DOL is working on a very specific database on how to deal with the abandoned plans, but that's a hot topic. Fiduciary education, you know, attending this webinar, attending other webinars, seminars, teaching you, if you're a plan fiduciary, teaching you about the rules, your responsibility, roles, of what goes on with the plan and what you need to do. That's very important. ESOPs are always a part of it, as well. With ESOPs, they're looking at stock value, they're looking at transactions. Did a company convert from privately held to ESOP only? There's tax benefits there that, you know, could have potential ramifications. So they just want to make sure that there's arm's length transactions taking place there. You know, and frankly, and John, maybe this occurred in your time. They started some national enforcement projects, very minimal, when I was there, but they seem to have taken on a life of their own, where maybe some of the field offices are being told directly that a certain percentage of their cases need to be aligned with the national enforcement projects, which I know are on the DOL website, and I'm kind of going by memory, but you know, a number of them are around health benefits, which is not my area of expertise at all. But then it does get into protecting the, you know, benefit distributions, investment conflicts, and well, ESOPs are a part of that too.
Yeah. When I was there, it was growing. Like I said, the MIWA fight. So health benefits offered through, you know, unrelated employers banding together. That we were heavily investigating that at the time. That was a national. ESOPs, I did several ESOPs. You're talking about valuations. I can remember one that actually went criminal. We asked for the valuation, and he turned around and wrote it on a cocktail napkin and handed it to us, and so that was his valuation. We just sort of said, "Well, thank you very much. We will definitely be back in touch to have that conversation." But yeah, so there were nationals. I don't remember us having a percentage, like saying X number, but for sure we were upping those investigations. Say, hey, you guys are going, you know, for every normal plan, you're going to also look at these to look into them. The late contributions, as Paul said, that's almost the bread and butter of the DOL. That's low hanging fruit. Almost every plan is going to have a payroll cycle here or there where something happened and it went in a little late. And you know, if it's outside any kind of normal delay, they're gonna ask. You know, if you read all the guidance says no later than 15 days, that is the outside minimum, and that was set up back in the days when we had to mail everything. Now it's as fast as you can get your payroll taxes paid. So if your payroll taxes are going to the IRS that same day, the money better be going to the 401k the same day or the next day. If there's much more delay than that, you're going to get a lot of questions. It's going to be sort of deemed late. But that's sort of the big one, is the late contributions. You know, we had one, Paul, you're talking about fees. They asked for the invoices that they've paid to every vendor to the plan for the last like 5 to 6 years. So lawyers, accountants, auditors, everything. So one, they're checking to see, you know, what was appropriately to be paid out of plan expenses. You know, so you know, those are some items you can pay, the company has to pay, some items the plan can pay. So they're very heavily focused on that. And then they were also looking into the funds, you know, the fees that are on the fund. But you know, the DOL will get involved if they think you're paying too much in fees. But for a lot of times, as long as you can say we had a reasonable process, and this goes back to Paul's comment about fiduciary education. If you say, listen, yeah, we're the fiduciaries of the plan. We evaluated, 3, 4 different vendors. We chose this vendor, not because they're the cheapest. They weren't the expensive. But we chose them because they have great service. They had the things we need. And maybe you're an industry that has some weird overtime rules, or you have weird bonuses structure, something that creates a little more complexity in your plan. And these people deal with it a lot. That's a good reason to have a service vendor that knows your industry and knows what you do. And so they won't always, if you say, this is how we did it, and this is why we did it, even if you chose the wrong path, they're going to say, we need to fix it, or you need to do this, but they're not really going to penalties or anything like that. They're going to say, well, clearly you had a reasonable process. You just made a bad decision, or you didn't make the best decision you could. Versus, well, why'd you hire those? Well, it's my brother-in-law. And why are you paying these fees? I don't know. We've never actually looked at the fees. Comes out of the employee's accounts. We don't really care. That's the wrong answer.
Mhm.
And so, but yeah, so they do look at it, but you want to be able to say, as a fiduciary, you also looked at it and you have reasons for doing the things you did. And the reason better not just be because it saved the company money or it made me money. Because that's straight into self-dealing. And then we get back to the criminal world.
John, you mentioned something, in your example that I think is intriguing, because most people that encounter a DOL inquiry request, I mean, for the most part, they're asking, at least initially, back 3 years, but you mentioned 5 to 6 years. You kind of want to take this opportunity to run through maybe the statute of limitations on some items and clarify, when the statute runs and what triggers statutes and so forth.
Yes. So for the most part, it's kind of like the IRS. It's generally 7 years. However, technically, ERISA does not have any kind of real statute of limitations. You always have to look, if we're going to a civil court or participants are bringing claims, we look at the claim, the most analogous state law claim, which means it can vary all over the place. For the most part, the DOL, most audits, they start, Paul said, at 3 years. They have the ability to go back to 7. But if they find an error, for example, on the 5500, that makes them think prior years are involved, then they'll expand back. I've seen them go all the way back to 10 on things, just because they're trying to figure out how we got to where we're at. And so they'll ask for it, and so we'll push back sometimes, but they're like, well, we're not going to prosecute for that. We just need to see the foundations. For a 5500 violation, so say you did something, you didn't file your 5500, or you filed it incorrectly, those sorts of things. Technically, there's no statute of limitations on those. The reason being, each new year you don't fix it, extends the statute, so it just keeps running. So if you missed the 5500, you missed some sort of filings, file it as soon as you can to stop the bleeding, and then we'll worry about fixing the prior years. So those are those can come theoretically, go back forever. But again, for the most part, the most I've ever corrected on one of those is 10 years. Usually it's 3 to 6 is sort of where we're at.
Okay, the next question, we touched on it a little bit, but any other insight on how late deposits of deferrals are identified by the Department of Labor?
So, John, help me out here, but best of my memory, obviously the 5500 has the question, very, very direct, were any deposits late, yes or no? And if they were, then you got to provide the amount. I remember talking to a couple of the, DOL folk and asking them, like, we might have a client or something that missed, I don't know, a decent amount, and they didn't seem to get selected for an inquiry. And then we'd have another client that, maybe reported a much smaller amount that translated into a payroll or two due to a lot of times it's just a vacation. Whoever does it
Yep.
takes vacation and somebody doesn't pick up that responsibility. And they get the inquiry. So I remember asking, hey, what takes place here? And what I was told was on a weekly basis, they get a download of 5,500 filings, and they put them into some type of spreadsheet, like an Excel spreadsheet, and they sort it highest dollar amount to lowest dollar amount, and then literally just start knocking them off one by one, because they want obviously the largest dollar recoveries that they can get. So someone that's filing a 5,500, reporting this near a due date of, let's say, July 31st, or on extension October 15th, they're theoretically, I'm kind of making this up based on what I heard, but theoretically, they're less likely to get an inquiry because they might be mixed in the middle to the lower end than somebody that is filing early, for that same 12/31 plan year end. So
Yeah, I think that's
Yeah.
like I can remember they went after who had the most plan assets reported, figuring that's a bigger plan, so there's more people, so there's more likely a correction. And I remember saying, well, yeah, like this looks like that. So I just had a client, they reported on the 5,500, they had some late. And so they got a letter. And the letter was, it's not that you're under investigation. The letter was, hey, we've noticed you reported on your 5,500 that you filed some late. We invite you to use the self-correction program. And so that's one thing about this is if you get that letter, that's great, because then you can just do the self-correction program. There's an online calculator the DOL has. You can help calculate lost earnings and different things like that. Depending on the correction, you may need to do a QNEC, a qualified non-elective contributions, like for people that didn't get contributions at all versus late. And so you can do self-correction. Now, true self-correction is you correct it, you put a memo in your file, and you move on. If the DOL sent you the letter that says, hey, we invite you to do self-correction, you should probably go through the formal VCP correction program and pay the filing fee. It varies somewhere between 1,500 to 3,500, depending on how many plan assets you have. But the reason being is if you don't do the formal process, the DOL has no record that you actually corrected, and that will probably then trigger a full audit. Whereas if your name's on the list of the invitees, and then they see your EIN go through the self-correction portal, they'll know you did it. So if you have that letter, you're not under investigation yet, but if you don't do it, or you don't do it through the formal process, you will be on the list. Yeah, but it was that. I can remember a couple where people had called to complain and said, hey, my contributions seem to be coming in late. But those were significant lates. Like they were in between, like they were getting monthly statements and they weren't showing up for payrolls the prior month kind of thing. So those were really late. Where I see it the most common is, you mentioned vacation. These days it seems like it's vacation, or it's we're switching payroll vendors. We're moving from ADP to Oracle, we're moving to Paycor, and there's that gap in between where we're all trying to make sure everything works right. And now we've missed 2 or 3 payroll cycles slightly because of working that out. So if you're changing payroll systems, just sort of keep an eye out on that, and know you may need to just do a self-correction. Because if you discover it that it's late and you haven't gotten a letter from the DOL and you're not under investigation, we really can just do the full self-correction and just correct it, stick it in the file, and if they ever come asking, we can show it to them.
So, John, does the DOL identify a possible investigation? How do they do that? And do you think that there's some new questions on the new 5,500? And obviously they went into more detail on the fees on the 5,500. So do you think that they're doing that because they're trying to identify more areas, or what are your thoughts?
Absolutely. So they run in general, maybe 2 to 3 years behind on the 5500s. So, for big investigations, they're always a little bit behind, just because they're wrapping up, current investigations, getting the new ones in the hopper, and those sorts of things. But that was part of the new process. Is, you're selected either through multiple complaints generally, or some sort of complaint that a participant makes. Your 5500 triggered something, or you just fall into this national spotlight, whatever it is they're doing. But the new questions are developed to, one, new things to look at and target on the 5500 violations, or things that will trigger. And because there's national incentives and national initiatives about fees and those sorts of things, so that they're using this reporting to develop what that's going to look like. What they'll do is they'll take a couple years 5500 responses, sort of see what they've got, and then they'll develop the attack initiative, we'll say, from there, as to what they want to look at. Because one of the things they will do is internally, there are audit manuals, investigation manuals, and say, ask these questions. And so they'll update that, for fees example, say, all right, here's the new questions you're going to ask in an audit about fees. And here's why you're asking, here's what we're looking for, to develop that new process.
I'll just chime in too that, back in the day, and John, you probably missed this opportunity. 5500s were paper filed, and for our jurisdiction, Cincinnati, they were filed with the IRS in Memphis, Tennessee. So twice a year, there'd be, anywhere from 3 to 6 of us sent for a week down to Memphis to sit in an IRS warehouse, pull boxes, and essentially pull 5500s sufficient enough to last the next 6 months for the entire office. And for whatever reason, I was blessed to lead a lot of these teams. I was told at one point that I had a higher hit rate than others, but it's kind of funny. I can sit down and look at a 5500 or a series of 5500s and really do a quick risk analysis that will help identify just a possibility that the DOL could go after something there. It's I guess interesting training, and not the most fun times, but I do have I don't know, me and that computer, yeah.
Thankfully I missed that. Ours would just get you, it's like, here's the list, and here's we either get a stack of printouts, or we get a log in and pull them up. But no, I'm sort of the same way. 5500s, after a while, you can sort of skim through them pretty quick and go, okay, here's potentially where our issues are. And again, those issues are swings in numbers, swings in participant counts, dollar amounts, big losses, big gains. Vendor, you can sort of skim the vendor fees that are reported on 5500 to see if everything sort of looks right. Is there one vendor, is there 15 vendors, those sorts of things. So those are the ones that everybody's looking for, is those big swings. And then there's the other ones. Was it late? Did you go through a correction process this year? Was there a merger? Those sorts of things, because those are all areas that potentially lead to issues, we'll say.
It was always kind of, in my mind, the 5500 would identify the possibility, and then the audit report would either support it, or sometimes the audit report was so specific that it was like very clear there wasn't an issue, or it was very improbable that there was an issue. So
and that's something we haven't really mentioned, but when you're working with your plans, make sure you have a good plan auditor. We got 2 good auditors here, but when you talk to your auditor, make sure they do lots of plan audits. I had a case where turns out at the end of the day, the auditor only did one plan audit, and that was for the plan we were working with, and they got in trouble because the audit was terrible. So to the point where the IRS said, we're referring your auditors to the state boards of accountancy. Like, we think it's that bad. So, find an auditor who has a lot of experience with your types of, it's 401ks, 403bs, whatever it is you're working on. Find the auditors that do a lot of them, that are have a dedicated team to doing those, because to Paul's point, that audit report cuts off a lot of things. If you've got a good audit report, and I saw a swing in numbers, but then I look at the audit report and said, well, they had 2 acquisitions during the year, and they acquired these locations, and they merged the plans into there. Well, that makes sense. Or company conducted a layoff or whatever, and participant counts dropped. Those audit reports help tell the story, and a lot of times you look at that and go, well, that doesn't look that good. Like, I don't think I'm gonna find anything from, if they say a layoff and they lost 1,000 people, and that's not as exciting as this one over here that's got all kinds of weirdness, and the audit report's very vague. I think I have a better chance of getting recoveries from here than this one that clearly has competent advisors.
Yep. Okay. Hey, Paul, do all DOL investigations start as an investigation, or can one of these inquiries that we talked about earlier eventually lead to an investigation?
Yeah, actually, the latter, what you just mentioned. I mean, for the most part, there might be just a general notice. Hey, John said it before. We noticed that there's late deposits here. Could you just fill us in on what the correction has been? And it's a great opportunity to self-correct before you even get that letter, and just be able to say, this has been taken care of. Generally speaking, if there's a complaint, an inquiry, something on the 5500, and we started out the conversation with this. John mentioned 70% have results, but that means 30% don't. So those generally start out as what they call program 53s. They're limited reviews. Hey, we think there's something here. We want to take a look. Send us your documentation for these periods. Let's go through it. And the hint that maybe that limited review has turned into a full out investigation is when they keep asking for additional documents and additional documents.
Yeah.
And the time starts to get lengthier and lengthier and lengthier. I don't know if they've changed their ways. I know we never said, oh, hey, we're on to something, and we've flipped this from an inquiry review to an investigation. We just did it. And at the end of the day, we'd wrap it up with more often than not a voluntary compliance letter saying, here's what we found, and spell it out. And we left it pretty open-ended as far as what are you going to do, how do you want to respond, and what are you going to do about these assessments or allegations that we've just made.
John,
anything
they never turn on the investigation lamp, if you will. It's just sort of, it just sort of keeps crawling out. For if they call, if they get a participant complaint, and they make the call to the employer, and they don't like what they hear for the answer, sometimes that will trigger an investigation, or at least get on the list to start the inquiry to go to the investigation. I do a lot of work with ESOPs. When we set up ESOPs, I always tell them, listen, if it's a new ESOP, you're probably going to get audited. Either the IRS or the DOL or both are going to come calling, just because there's so much potential for the issues to be in an ESOP. And a lot of times, the DOL calls and say, well, we want to see the valuation, we want to see this, we want to see the trustee letter. And they'll do an inquiry that we'll provide the documents. And then at the end of the day, say, thanks. That was sort of it. They called, they looked at it. There's nothing there. Everything looked good to them, and they move on. So that does happen, but a lot of times if you get the letter that says your investigation, it's an investigation. The other times it's going to depend on what your response is. So, one of the things is just be professional, don't be defensive. Don't tell them any more than they need to know or what they asked. Don't start telling them your life story or the life story of the plan. But answer the questions they have in a polite manner and provide them the documents they ask for. If I can remember, Paul remembers this. You go investigate and they show you a room full of bankers boxes. Versus you show up and they've got 4 binders and they're nicely tabbed with all the responsiveness to your questions. Well, some audits went smoother than others, and we were less cranky after digging through bankers boxes versus look, they have everything here. So yeah, the auditors, how they're treated and sort of how you respond to them does help the course.
Mhm.
So if you answer their questions, so a lot of times those sort of move on. Versus like if you're evasive or vague or those sorts of things, they'll want to dig in, and now you may have triggered your own investigation just because
Right.
you didn't answer the questions you got asked.
Would you say,
And John, can I jump in? I'm sorry.
yes,
I just want to give everybody, John hit on this several times, but answer the question that was asked. One of the techniques that we were trained to use is ask a question, not always open-ended, and then let the individual talk. And a lot of people don't like silence, and they'll fill in gaps. And I mean, that's when you got some of your best information is, as you kind of wrote slow the notes from the interview. And the person didn't like the silence, and so you just kind of keep writing what was being said. John, you encounter that
all the time. You
Yeah.
ask one thing, and all of a sudden they've been talking for 25 minutes, and you've learned everything the plan's ever done. And usually it's, well, I wasn't here then, but this is all the stuff I heard. And you're like, oh, this is all excellent stuff for me, the investigator, but not doing well for the company.
yeah. So
Carrie, what were you going to?
Oh, you can go ahead, Ivana.
Okay, I was going to say, would you say the bulk of these or the majority of the investigations end up with significant findings, and how do they usually communicate those?
Not significant. I mean, like I said, it's about 70% resulted in some sort of monetary correction. A lot of those are late deferrals. So for example, I'm finishing up the correction in the next day or two. They were changing some payroll vendors, so they ended up being late, by about 20 to 25 days on a couple payroll cycles. Fairly large company. At the end of the day, I think it amounted to $700 in lost earnings. And so, but that's going to be the result. We're going to have to go through the correction process and pay the $700. And at the end of the day, you get a letter. Generally, it's called a no action letter or a no further action. Essentially, either we found these things during investigation, we talked about it, you and the DOL talked about them, you corrected them, and so we're not going to take any further action. We identify these late earnings or these errors, you fix the errors, you've proven to us that you fixed the errors, and we're not going to take any further action. Because if there's additional action beyond the investigation, at that point, it's probably because they're referring it to a regional attorney for litigation, whether civil litigation or criminal litigation. So you usually want to get to the closing letter or the no action letter. But there is always a letter of some kind laying out what they found, what you did, how satisfied they are. Now that may take, and I always tell people, you've got to be patient with these, 12 months, 18 months, 24 months, potentially longer, depending on what they're involved in. We had one where we had a new investigator, brand new investigator, recent college graduate, had just finished being trained. And that one took an inordinate amount of time. But part of that was everything he did was being reviewed by a supervisor and maybe the other supervisor to make sure it was right, because we were the training exercise for this guy, and he did a good job, but everything just took much longer than it should have. Because, we were essentially the first audit he'd ever done. So rather than get frustrated, just, find your happy place, be patient. And it becomes a very Zen-like flow, just as it happens, you just respond as needed. But yeah, so you will get a letter when it eventually finally ends.
So Paul, if a plan sponsor or a fiduciary becomes aware that, they messed something up, what should they do? What would you recommend?
Yeah, correcting it. First and foremost, especially if there's some type of loss to the participants, make the participants whole. Engaging your service providers. If you come across something, regardless of DOL involvement or not, reach out to your advisor, reach out to your record keeper, reach out to your ERISA attorney, and get the ball rolling to get it corrected. Self-correction, identifying things, self-correction, cooperation, and just at the end of the day, the Department of Labor just does not want employee participants to have losses, that shouldn't have occurred, right? There's going to be market ups and downs. That's natural. But, when somebody's shortchanged on contributions or some type of credit or fees are excessive, this is hurting the benefit that the participant might ultimately have. And that's what they just want people to be whole, to be made whole.
Yeah, if you're a plan sponsor and you find an issue, reach out to your providers. Your auditors, your accountants may have experience with fixing it. Your investment advisors may have experience. Your lawyers, your benefits attorneys have experience. Find the vendor or ask them. If they're like, hey, we don't really help. We don't know. Here's who you should call. Find the person that can help fix that. But if you discover it before the investigation, before you get a letter or anything, you have a lot more flexibility. So there's a whole correction system, but the DOL and it should be an IRS issue as well. The IRS, they keep expanding what you can self-correct. It used to be a fairly narrow list. Now it's getting much larger. So, as soon as you find it, as soon as you start on that path, as far as to get the ball rolling, you have a lot of flexibility to make those corrections. And, to Paul's point, the DOL, they care how you correct it, but at the end of the day, it's, did you make the participants whole? Did you make sure that they didn't suffer a loss? If you can prove that, they're usually pretty happy with how you correct. If you ask yourself, what's the right way to do it? Usually the answer is whatever makes the participant better off than the employer. That's the right answer.
Yeah, right.
Yeah. Righty.
I believe
Do we have any questions?
Nope. That brings us to the end of our hour. Thank you so much to Yvonne and Carrie for moderating today's discussion. John and Paul, thank you so much for the insight. We will send out the recording link later on today or tomorrow, as well as the contact information for all of our presenters. I hope everybody enjoys the rest of their day. Thank you.
Thanks.
you.
Thank you.